How do you keep this sustainable? With a budget. Budgets are your friend. I made a really basic budget template for you in an Excel file that you can download in the resources page. There are also any number of apps that will help you to track your monthly budget. You Need a Budget, YNAB, and Mint.com are two of the most popular. However you do it, you want to make sure that you track your expenses for a few months. Make sure that you account for those recurring but not every month expenses. Things like car insurance that only pop up every 6 months. You still want to allocate a monthly amount so that it doesn't come as a surprise when you get that bill that you know you're going to get but you didn't save for. Creating a budget is an extension of the fourth step, living within your means. You've got to make sure that you aren't overspending, especially in things that you don't really care about. Part of why we want to create a budget is to make sure that it actually reflects our values. By tracking everything you spend for a few months, you can figure out not only what your expected monthly expenses are, but where you are spending money that you didn't realize you were spending quite so much in that area. I'm not here to shame you about your love of lattes or fancy shoes or fuzzy hats, but you want to make sure that you're consciously spending that money in a way that reflects your values. If at the end of the month you can't afford art supplies, you'll need to look at your budget and see what's less important to you than your artistic practice. Speaking of which, while you're still in school, start planning for what art costs you'll need to account for after you graduate. One of the best ways to make sure that your budget is going to work is to automate as much of your financial life as you can. Use either your bank or your credit card to set up automatic bill pay for as many of your regular expenses as you can. You'll want to decide whether you're going to pay that bill in full every month or just make a minimum payment automatically and then go back and pay whatever else you can, depending on your situation that month. It's still a good idea to make that minimum payment regularly scheduled and automatic so that you don't have to worry about missing payments or accumulating late fees. If you've got a variable expense, something that changes over the course of the year, see if there is a level monthly payment option. Xcel Energy, for example, will let you average out your monthly payment and settle up the difference once a year. You can usually get an interest rate reduction on your student loan if you sign it up for autopay. If you can avoid the evil temptations that come with credit cards, using one to track all of your expenses, using the same card to pay for everything, can help to keep your budget simple. If you're somebody whose credit card purchases can get out of control quickly, then switch to cash only, especially for all of your wants. Step 7 is to understand your student loan options. It's so big, we're going to have a whole section on it in this module. All I'll do right now is mention that studentaid.gov/loan-simulator will allow you to experiment with different repayment options. Debt in general is a thing to be avoided, especially for artists. You'll have a lot more flexibility to spend more time in your studio if you don't have debt hanging over your head. For most of us, it's impractical not to have a mortgage, and it'll take a while to pay off your student loans. But kill your credit cards and any other debt you have as fast as you can. There are two methods that we'll talk about. One is called the Debt Snowball, and the other is called the Debt Avalanche. Both plans involve making a list of all of your debts and making minimum payments on everything but one. Then you throw everything you can at that one payment. Once you eliminate that debt, you roll that payment into the payment for the next debt in the line. If you get a raise, instead of just spending the extra money, you add it to the one debt you're trying to pay off. If you come into unexpected money, you apply that windfall to the debt as well. You keep doing this until you're out of debt. So what's the difference between a snowball and an avalanche? I guess whether or not it would kill a yeti. With the snowball, you pay down your debts in the order of the amount that you owe. You pay off the smallest ones first and keep working through the list until you're tackling the largest amount owed. With the debt avalanche, you're going to pay off your debts in the order of the interest rate. So the credit card with 18 or 22% interest gets paid off first, even if your account balance is larger than your car payment. The advantage of the debt avalanche is that in the long run, if you can stick to it, it will save you money. But sometimes it's hard to stay disciplined when you're not immediately seeing results. Advocates of the debt snowball method think the psychology of eliminating some of those smaller amounts will keep you motivated to keep going, because you'll actually be able to see the progress. And then, once you've eliminated most of your debt, set up targeted savings accounts so that you can save up for anticipated large purchases. You know your car is going to die eventually, so planning for the car payment by saving up a large down payment is a good way to go. Another of the personal finance cliches, right up there with save an emergency fund and live within your means, is to pay yourself first. Typically by diverting a minimum of 10% of your income into some automatic savings system. The idea is to have direct deposit or some other automatic withdrawal system hide 10% of your income before you even know it. It's withdrawn before you start your monthly spending. You pay yourself first, and if that money is rerouted into another account, you won't miss it because you never saw it. Eventually, either because you're saving a lot or you have a large emergency fund, you might start to think about how to invest your money. There are, in scientific terms, about a bazillion videos on YouTube that will tell you how to invest your money. To keep it really simple, just know that index funds historically provide the highest net return, and that Vanguard is a discount broker that will let you open an account with a really low initial deposit as long as you set up automatic deposits for future months. What kind of account do you want? Depends on your goals for this money. Consider things like your risk tolerance and how quickly you'll need the money. Also, think about retirement now. When you're so young that it seems ridiculous for you to plan for your retirement, that's when you need to start. Because the sooner you start, the less money you have to put aside each month to accumulate enough to be able to retire. If your employer offers the option, definitely sign up for a 401k or a 401(b), which is the same thing but for nonprofits. There are several tax advantages, and your job might match your contributions, which is essentially free money. If that's not available to you, a Roth IRA is a good choice. If you're self-employed and making enough income, look into setting up either a SEP IRA or a KEO plan, which are both basically self-funded retirement plans. While I'm being a naggy art dad, I'll also mention that you need health insurance. If it's available, you can stay on your parents' health insurance until the age of 26. If health insurance is available through your job, take advantage of that. Otherwise, use the ACA portals to see how much you can get the government to subsidize your health insurance. You're required by law to have auto insurance, but many of us early in our career don't actually need life insurance, which is really just designed to replace your income for a short period if you die. If nobody needs your income but you, then you don't need life insurance. As an artist, it's not too early to start thinking about setting up a will. Where's all that art going to go if you kick it? And a living will, or a durable medical power of attorney, isn't something you want to think about, except that it's something you need to think about. And at some point, if you want to buy a house, avoid all the fancy mortgages and just go with either a 30-year, or if you can swing the payments, a 15-year fixed-rate mortgage. There's a lot more that goes into personal finance, so look through the resources at the end of this module. It is probably a little bit silly that an art teacher is giving you financial advice, but this brief introduction is a lot more than I ever got. Also, eat your vegetables, floss every day, and get off my lawn.